So your firm focuses on deep tech, and I want to get your understanding of what do you define as deep tech? And the broader question I have for you is why has deep tech become so compelling for investors in ways that it may not have been 10 years ago when everyone was focused on software companies?
Well, listen, I think deep tech is a new fancy term now, but so for some of us that have been around for decades, investing in semiconductors and hardware, this is kind of like it's a Tuesday, right? So we do this all the time, and I used to be at Intel Capital for a long time, and Intel, as you know, was one of the OGs of corporate investing. And it really stemmed from that. And a whole bunch of us were focused around the layers closest to the metal, as it were, which is the hardware layer. And we were investing in semiconductors. We were investing in networking related technologies and the infrastructure layer, as it were. And it became called deep tech, and we were just hardware investors. Now, the reason why this has become so profound right now as an opportunity for investment and as an opportunity for some of the larger players to really focus on it is because the constraint in the innovation landscape moved, right? But there was a period when it was all about software. There was a period when it was all about SaaS. It was innovation in the business model. How can you actually deliver a service on a per user, per month basis? And that lasted for some time. And then people realized in the advent of, the whole AI, machine learning, robotics, and all of that, the constraint is not software. The constraint is really the raw compute and the raw energy required to power that compute. And there are so many innovative startups and technologies that are relevant, and as a consequence, now you see everybody going into that space. And the funny thing I like to say is that semi was a four-letter word in Silicon Valley, and now it's sexy, right? Everybody wants to do it. So that's kind of where it is. But for some of the folks in the ecosystem, this is what we've all been doing for a long time,
Right.
and now there's a market recognition that this is a huge opportunity for the whole ecosystem.
So let me ask you about the ecosystem at large. I mean, we've seen some of these chip deals recently. We've reported ourselves here at The Information that Meta will be using TPUs. We've obviously seen that OpenAI has done its fundraise from Amazon, and as part of that, it will be using the Trainium chip. And I wonder what you make of these chip deals as you see companies diversify away from Nvidia. What does it tell you about the chip sector at large right now?
Well, I mean, this is kind of the movie that is played before, and people don't like the ending. And by that I mean, you remember the times when Intel had 95% of the overall market segment share in desktops, and then subsequently the Intel had a pretty amazing overall market segment share in data centers and servers. And people don't like to be trapped into one supplier kind of a situation, monopolistic powers and, pricing control and all of that. And you're seeing that play out in Nvidia. Now, the interesting story is that Nvidia has actually built a pretty powerful moat around their products, around their technology, around their lead. And it's no longer just about semiconductors. It's about the software ecosystem. It's about their ability to sort of go into the developer ecosystem to really have all of these frontier models and everything else and the applications and services get built on that capability. And so as a result, the Metas of the world or the Amazons of the world are finding out that they have to now really invest not just in the semiconductor, but really look at how do we create that ecosystem. And as a consequence, you're seeing significant amount of investments that are happening from all of those other players while they are very delicately balancing their existing customer supplier sort of the relationship with NVIDIA. Everybody wants to get out of that jail, but some of them are probably better positioned than others to be able to successfully get out of it. But in the near term, I think in training, NVIDIA is going to have a pretty substantial advantage for the foreseeable future. Now, inference is very different. Everybody is going to look at inference as a way for sort of decoupling from the Nvidia story. And when it comes to edge AI or edge inference or robotics or physical AI, there are significant opportunities for many of these companies to be completely independent of existing suppliers.
When you talk about who is well positioned to break free from that Nvidia shackle in some ways that you mentioned, who are you watching to make the next big deal with Google for the TPUs or Trainium on the
Well, I
inside?
mean, it's hard to predict, but I think you're starting to see Meta make a lot of moves on you saw that they bought Revos. You saw that Intel actually made an announcement with Samanova, which is one of our companies that we have invested in for quite some time. So when it comes to sovereign AI, you're going to see a lot of these companies form partnerships. Another one of our companies is a company called Tensordyne. You're seeing these companies form early sort of relationships with these large players, and it really stems from their desire to create a substantial independence from the existing training architecture that NVIDIA has offered. And
So,
so, sorry, go ahead.
on the Intel Samanova deal, I mean, this is something I was actually really excited to ask you about because Lit Bhutan is your co-founder of your venture fund that you've started, and he, of course, is the chairman of Samanova. There were some reports that Intel was looking at buying Samanova outright. Why didn't that deal happen?
Well, listen, I don't know. I can't speak for Intel. I mean, Lip-Bu is an amazing semiconductor leader, and you're right. He's a co-founder. We work very closely together. I think to me, I think Samanova has a very unique solution that is very strategically relevant for Intel. So I'm really happy that they're going to do a substantial commercial relationship. I don't know the mechanics of why they decided not to want to get acquired by Intel, because I can only say that the opportunity ahead
Right.
for Samanova is quite substantial.
Do you think it could happen?
Do I think it could happen as in Intel could acquire?
Yeah.
I can't predict, but I think the opportunity for Samanova to build a very large business in conjunction with and independent of Intel is real. So they are on a great path, and you're going to see some pretty amazing things that come out of that company.
So let's talk about Intel, where you spent nearly 2 decades earlier in your career. I just want to talk a little bit about the company's trajectory right now. What do you think the likelihood is that Intel spins off their foundry business?
Well, I don't know the exact day-to-day sort of a thinking that Lip-Bu and the team have, but I think there is a fundamental question that one has to ask about the industry. This whole model of IDM, integrated device manufacturing, where you have the design and the manufacturing capability tied together, which is really what Intel is one of the OGs of fab and design together. That model, I'm not so sure the industry can sustain that model. And by that, I mean that if you don't have enough products to put through the pipeline of the fab to fully utilize the capacity of that fab, you're really in trouble, because the capex required and the opex required to keep that fab running presumes that you're going to have a 80, 90, 95% utilization. And if your products that you're designing are not in the market, getting that level of traction, you're going to have an underutilized, highly capitalized asset, which you can't sustain. Now, this is not just true of Intel, it's true of every major, fab plus design entity. I mean, case in point, this is what AMD went through, 15 years ago, when they had to make the decision to spin it out, to result in the formation of global foundries.
Right.
This is more of an industry business model issue, less of an Intel issue. That's not to say that Intel is not going to get hugely affected by it. So unless and until Intel creates the tool chains and makes it easy for fabless companies to use the leading edge process that the Intel fab creates, they're going to have a real problem relying on their existing products to go through the fab, right? So I think it's a chicken and egg, and they have to figure that out.
Let me ask you about the memory chip supply chain crunch that we're seeing. I wonder how you think this will play out. Is there something acute happening that you think we can get over, or is this an issue that companies, your own portfolio companies even, will have to sort of get used to a new normal for the next 12 to 18 months?
Well, listen, I think your question is appropriate in the context of what's happening for the large memory players like Micron and others. But I think there's a larger thing that's going on because up until recently, everybody was focusing on GPU, the core compute in the AI infrastructure, as the the giant sucking sound of all capital going in and value creation. But in reality, if you peel the onion, there are at least three other, if not four other subsystems, if you will. One is memory, obviously, and the other is the networking and the interconnects, and the third is really energy, and the fourth is really the power management that goes into the data center, which has a direct correlation to energy utilization and all of that. These four subsystems are quite substantial in making sure that the AI infrastructure is operating at its highest efficiency without constraints. So what you're seeing happen with the memory companies is really as a result of the industry evolving from just training to inference, and also looking at how do I actually keep all of these models in C2 in the chain to actually be able to deliver the right inference. So I think you will see a consistent sort of demand for memory products, almost akin to what you're seeing on the compute side for the foreseeable future. You can't decouple it. And so in that sense, I think you're likely to see things sort of bleed into the networking side. That's one of the reasons why companies like Upscale or Astera Labs and people like that are going to see a pretty interesting evolution. Upscale is one of our companies. We just started it, and we raised significant amount of capital to really go after what NVLinks offers from Nvidia, but really try to do it from scale-up Ethernet for the scale-up architecture in the data center.
So if I hear you correctly, what you seem to be suggesting is that even before the memory crunch sort of eases, we will actually see this crunch spread to other parts of the chip ecosystem as well, including networking and other areas.
That's exactly right. I mean,
Okay.
remember, when you build the compute infrastructure in a rack, and when you try to make the rack to be highly dense by putting
Right.
more GPU, blades on that rack, you run into the next problem of how do I get coherency? How do I get networking infrastructure built to connect those various blades, if you will, in the rack?
Right.
That's
So basically, I mean, we've got Broadcom earnings coming up. So this is something that you're watching for, language here around, are we seeing a supply chain issue?
100%. I mean, that's what I would watch. I would watch to see, where is the constraint moving? From GPU to memory to networking to
Right.
power management to energy. That sort of flow is likely to occur, and so that's an interesting place for folks like us and firms like us to look for innovative startups to invest in. I mean, we invest in the power management space, we invest in networking, we invest in chip to chip interconnect. These are all areas which are all going to have huge opportunities moving forward.
Great. Well, Sriram, I want to thank you for coming on the show. That is Sriram Viswanathan, the founder and the founding managing partner of Celesta Capital, here on TITB.